Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess. We do these live streams every single weekday, so if you are new here, please don't forget to like and subscribe and press the bell notification button so you don't miss the latest cryptocurrency news. Let's take a look at the price of Bitcoin here quickly and see what's going on here. We have Bitcoin currently sat at $29,917. We have come slightly down below that $30,000 level, but we also have Ethereum sat at $2,095 as well. In the last 24 hours, we haven't seen too much movement for either of the assets, but in the last week as a whole, it's been incredibly profitable. So we can't complain too much. We are still holding some important levels of support, which we will be talking about towards the end of today's stream. We will be going through the latest cryptocurrency news, and then we'll take a look at the price of Bitcoins to make sure to stay tuned until the very end. Let's take a look at the markets now. Let's take a look at the news and see what is going on. Let's get this all set up correctly. First of all, we have Ethereum breaking $2,000 and Bitcoin dominance being rejected at 49% could be a sign that we are going to see an altcoin season. Let's check in with the chat first. SSJ said listening while at work, got to hear the latest cryptocurrency news from the best place to get it. Exactly. Thank you very much, SSJ, for tuning in. Let's take a look at the Bitcoin dominance here and see how this has actually played out. I'm sure this is actually within this article as well. We can see here that Bitcoin dominance, the cryptocurrency market cap of the entire cryptocurrency industry, has been rising pretty significantly. We now have seen Bitcoin dominance reject from that 49% level. So is this a sign that we are going to see an altcoin season? Well, we have seen a pretty nice rally for Ethereum in the last couple of days following the Shanghai upgrade, and we have now seen this rejection of Bitcoin. Really, what we see pretty often over and over again is that Bitcoin will perform incredibly well. Then we'll see Bitcoin start to steady off a little, and then Ethereum will start to perform very well, and then soon after, the altcoins will start to pump. Now, obviously, this doesn't happen every single time. Sometimes when Bitcoin gets rejected, it means we are going to see a little bit of a pullback. Sometimes it could signify that we are going to see a nice move to the upside, and if we are, we're all going to be incredibly happy. And a lot of us here at Crypto Saving Experts are big altcoin fans. I'm sure you all know this already, and I'm sure a lot of you are in the chat as well. James says, as long as we stay above $28,500 for Bitcoin, we are going to continue to go up. Well, we are going to do some Bitcoin analysis at the end of today's stream, so make sure to stay tuned to take a look at my levels of support and resistance to see what is going on here. Jason Smith said, did you get the Wi-Fi problem sorted? Yes, I've put a booster box in the room with me now, so hopefully it should be all sorted, but let me know if we have any more problems. Let's take a look at the next article now and see what's going on, because we have some pretty big news here that the SEC could begin to regulate DeFi. Now, the SEC has been ruining the fun a little bit in the world of cryptocurrency for the last couple of months. They've been regulating many different cryptocurrency companies. We don't like to see it. We want to see regulation, but we want to see regulation done correctly. We want clarity around the regulation, and we want the cryptocurrency companies to understand how they can continue to grow in this space. But right now, the SEC is causing problems for cryptocurrency companies, so much so that some are just choosing to leave the US as a whole. So this is what we're seeing here, but right now we can see that the SEC reopens proposed rule change that could subject DeFi to regulation. So what they're looking to do here is broaden the definition for the word exchange. And if they do so, it could mean that DeFi comes over under the term of exchange. So taking a look here, the SEC commissioner has said he's also called Crypto Mom, said first caught clues on the commission's move to bring DeFi under its regulation in January 22. It follows a proposed rule change that seeks to expand the definition of the word exchange under the Exchange Act rule. So we can see here that today the SEC meeting confirms these concerns, that the 5-member commission voting 3-2 to reopen comments and provide supplemental information which explicitly targets DeFi platforms as systems to be included in the amendment. So we can take a look here, and is DeFi regulation bad? Part of the challenge with DeFi regulation has been that it could force the centralization of these protocols, and that is the key points here that we want to avoid. We want to see regulation of the cryptocurrency industry. But if we force centralization on DeFi, decentralized finance becoming centralized is just traditional finance again. We've not solved any problems if this were to happen. So against the will, which could force DeFi's protocol to register with the regulator as exchanges or broker dealers, meaning they must comply with securities laws in the same fashion as centralized counterparts. So we can see here that they've argued the release fails to recognize the protections that come with decentralization, decentralized open source protocols, and to consider whether such protections might abbreviate the need for some or all protections of the security laws. So what we are seeing here is that we are trying to create an industry that is decentralized and it has all of these benefits, but regulating them in this way isn't allowing these benefits to be utilized and allowing the cryptocurrency industry to grow. What we need to see here is regulation that is adapted for the cryptocurrency industry. We can't put the Harry test that was created in the 1940s onto cryptocurrency and expect it to fit. It just does not work. We need clarity on the regulation and we need a specific regulation for the cryptocurrency industry. Now, Coinbase have created a campaign crypto 4345, something like this, and that is helping get the users of cryptocurrencies voices heard when we're trying to get clarity on regulation in the US. We're trying to, and we want regulation in the space, as ultimately we do. We want to allow the space to grow and we want the bad actors to be filtered out. We don't want to see FTX 2.0. We don't want to see Do Kwon and other people like Do Kwon do similar things to that. These are all bad things and we want those malicious actors to be filtered out. So we do want regulation, but we want the regulation to be put in place that allows the industry to continue to grow. And when we're seeing them do things that are basically forcing decentralized finance companies to make their projects centralized, that is not helping the industry at all. So we can see here that if this were to take place, there would then be problems down the line of cryptocurrency companies not following the regulations correctly, and then the whole cryptocurrency industry gets labeled as a scam or as a way for illegal activity. All of these problems that come from this we can see. Let's take a look at the next one here and see what is going on. The US Congress to introduce first draft bill for stablecoins. So something in the same token, the US government working on their cryptocurrencies, or their stable coins, we should say. The new stablecoin draft bill urges the US government to establish rules for interoperability between the assets and push for research on a digital dollar. So we can see here members of the United States House of Representatives has published a new draft bill for creating a comprehensive regulatory framework for stablecoins and intend to submit it during a scheduled hearing on Wednesday this week. So we can see here the new draft bill seeks to put non-bank stablecoin issuers like Tether and Circle, who own USDT and USDC, respectively, under the authority of the Federal Reserve, while insured depository institutions issuing such assets would be subject to the supervision of the appropriate federal banking agency. So what we can see here, so it requires stablecoin issuers outside the US to register with appropriate authorities before doing business in the country, and violating the law could result in a maximum sentence of 5 years in prison or $1 million in fines. So what we are seeing here is they are trying to ensure the deposits of stablecoin issuers. We can see here, let's get this right, the registration application to be approved, applicants must have reserves backing the stablecoin in US dollars, Federal Reserve notes, central bank reserve deposits, treasury bills with a maturity of 90 days or less, and repurchase agreements with maturity of 7 days or less backed by treasury bills with a maturity of 90 days or less. So what we are seeing here is they're trying to ensure the deposits made by stablecoin issuers to make sure that stablecoin can hold its peg pretty securely. A 2-year ban on algorithmic stablecoins also is being discussed. So the new bill proposed a 2-year ban on stablecoins not backed by digital assets. Now this, for example, is UST, which was not backed by digital assets. Instead, it was an algorithmic peg. And we can see here that the lawmakers are describing these stablecoins as assets that rely solely on value of other digital assets created or maintained by the same originator to maintain a stable price. And the bill seeks to ban the issuance, creation, or organization of these assets, pointing out that the US Department of Treasury would need to study them. So they are trying to put a pause on that while they do their research and understand this a little bit further. Interesting article here to have the deposits of stablecoin issuers insured forward is not necessarily a bad thing. Interesting that US Congress are choosing to step into this in this way, but we will see how this all plans out. Let's move on to the next article here. We've just gained 4 subscribers in the time that we've started this live stream, so thank you very much. If you have hit subscribe on today's video, please don't forget to like today's video as well if you are already subscribed, and don't forget to share the stream with your friends. We are currently on 2,873 subscribers, and we are on a mission to get to 100,000 subscribers by the end of the year, which may seem undoable, but we're on a mission to do it anyway, and we'll try everything we can to get there. Let's move on to the next article now and see what is going on next in the world of crypto. We have Certic warn of sinister new phishing attacks on mobile wallets. So we can see here the mobile wallet applications are vulnerable to manipulation and cannot be blindly trusted. So we just need to be careful, do our due diligence when it comes to the world of crypto. I'm not going to pause on this article for too long because we have a huge amount of articles to discuss today. Just be really careful and do your due diligence with everything in crypto. You are in control of your own funds, and you need to be careful when you are interacting with different wallets or applications. We have seen that BitTrue's hot wallet was hacked for $23 million in Ethereum, QNT, Gala, SHIB, HOT, and Matic. So one of BitTrue's hot wallets has been hacked with an estimated $23 million in tokens stolen. So the crypto exchange has since halted withdrawals and is working to resolve the issue. So we need to keep an eye on this and see how this plays out. They have paused withdrawals and they are now suspended until the 18th of April, so tomorrow. And the team have wrote, please note that the affected hot wallet only contained less than 5% of BitTrue's overall funds. The rest of our wallets continue to remain secure and have not been compromised. We are conducting a thorough security review and will update you as we make progress. So all withdrawals at BitTrue will be temporarily suspended as a precautionary measure until tomorrow. So now due to this hack, Quant has dropped by 11% pretty significantly and pretty quickly as well, but it looks like it had a rebound to the upside. We can see where Quant's at now. Let's take a look at the Crypto Saving Expert website and go to QNT. Let's see what this pulls up. In the coin section here, we can see Quant here is up 0.38% in the last 24 hours. On the daily chart, you can see we have had some volatility, but overall, it's not out of its current price range, just some volatility within the markets. If you do want the latest cryptocurrency news and you want to get information like this about all the different cryptocurrencies, just head over to cryptosavingexpert.com. Everything is absolutely for free. And if you press that sign up button here and you fill in this information, and you tick this button as well, you will get access to our newsletter that is published every single Tuesday at 11 a.m. So make sure to do that today so you don't miss tomorrow's newsletter, and you'll get a recap of the latest week in crypto, and you'll see what we're thinking and expecting for the following week. And that is a team effort here. We all have an input on that newsletter, so make sure to hear all of our opinions over on that newsletter, and just go to cryptosavingexpert.com, sign up. We have just heard news in this morning's meeting that we have just crossed the 6,000 users sign up level. So we've got 6,000 people. Head over to cryptosavingexpert.com, press that button and fill in that information. It's growing incredibly quickly, so make sure not to miss out and check out all of the amazing courses that have been written by the hardworking team. Let's take a look at the next article here and see what's going on. In the next article, we have Amber Group eyes Hong Kong as it considers a possible sale of Japan unit. So Amber Group is weighing the sale of its Japan exchange due to strict regulations, and this is what we were discussing earlier in today's stream. Regulations need to allow the cryptocurrency industry to grow, otherwise cryptocurrency companies are going to move out of the jurisdiction and go somewhere else where the regulations are a lot less restricting. And we can see here that Hong Kong is becoming a cryptocurrency hotspot while they are on a mission to do so. And while they are on this mission, they are attracting so many different cryptocurrency firms. This isn't the first time we've seen an article like this. We've seen many like this within the last couple of weeks. It looks like we are having some streaming issues still. So let me know how that plays out, if it is going to recover. It looks like it's back to being okay on my end, but let me know if that continues. I'm not sure why this is still playing up, but I'll work on this again. Amber weighs possible sale of Japan's unit. So Amber acquired Decrypt, a licensed Japanese crypto exchange, in February 22, expanding its presence in the country. But despite being a very high quality market, the manager partner has regulations in Japan are strict. So as I was saying before, regulations are causing cryptocurrency companies to move out of certain jurisdictions jurisdictions, moving to different jurisdictions, and Hong Kong has recorded enormous interest for several exchanges looking to operate in the city. Very interesting here. I'm hoping to go and visit Hong Kong at some point this year. It looks very good. It looks very exciting, and it looks like it is becoming a cryptocurrency hotspot. We can see here that subject to meeting relevant rules, Hong Kong's financial secretary has said financial intermediaries and banks will be able to cooperate with licensed virtual asset exchanges and providing trading services to customers. So what we're seeing in the UK is that the UK wants to become a cryptocurrency hotspot, or so the government have said, yet the banks are making it very, very difficult to work with cryptocurrencies. Now, Hong Kong have done the opposite. They have said, I want to become a cryptocurrency hotspot, and all of their banks seem to be working pretty smoothly with this and trying to operate with the cryptocurrency industry. So it's actually being a very, very successful mission so far. Let's move on to the next article here and see what's going on next. So advocacy groups has urged Meta to ban miners from the metaverse. Now, this is something that I'm completely on board with. Before we continue with today's stream, please don't forget to like and subscribe and hit the bell notification button so you don't miss the latest cryptocurrency news. We currently have 2,874 subscribers here on the channel, and today's live stream is currently on. Let's see how many views we have on today's stream. Let's pull this up. Let's have a goal of 25 likes on today's stream. We're already on 21 likes. Okay, let's raise the goal to 35 likes for today's stream. Please make sure to hit like and subscribe if you haven't already. And we can see here advocacy groups urge Meta to ban miners from the metaverse. Again, something I am completely on board with. The metaverse is a petrifying place, and to get miners on the platform at a young age is very, very concerning. So we can see here, let me turn off these stickers. Several advocacy groups and online safety organizations have written a joint letter to Mark Zuckerberg, the CEO of Meta Platforms, also the parent company of Facebook and Instagram, asking him to cease the firm's plans to allow miners into its new metaverse. So according to Bloomberg reports, the groups led by Fairplay, the Center of Countering, and many others, the Meta argued that miners would be prone to harassment and privacy violations in the new virtual reality world, which Meta is set to give them access to in the coming months. Now, this is something where Meta are going to be thinking with a profit mentality. I know other companies can come forward and say, come on, let's sign a letter to disagree with this, but Meta needs to be making a profit. They want to do what's best for their business. They're a business, so I don't see this. I don't imagine this will change much. And we can see here the groups wrote, Meta must wait for more peer-reviewed research on the potential risks of the metaverse to be certain that children and teens would be safe. Should Meta throw open the doors of these worlds to minors rather than pause to protect them, you would, yet again, demonstrate your company to be untrustworthy when it comes to safeguarding young people's best interests. So we'll see how this plays out in the next couple of days. This is not the first time, so the latest development comes just a month after 2 US senators urged Meta to terminate the same plan to release the metaverse app to teenagers because the platform could contain the some same flaws as the company's Instagram and Messenger apps for kids. So we'll see how this plays out, whether they do put a pause on this, but I imagine that Meta are trying to become, they're just trying to drive a profit as much as possible. Mark Zuckerberg has said that this is the year for efficiency for Meta. They've slimmed down the amount of staff that they have at the company, and they're focusing on their key goals here, removing any side tasks to try and create profits for themselves. So whether they ban this, we'll see how this plays out. Interesting debate to be had there. I agree with the concerns, but will Meta play along and decide that that's a risk worth taking or not? We'll have to wait and see. Time will tell. Let's take a look at this next article here. So BNB remains flat around $330 after 23rd Binance coin burn worth $620 million. So what we see pretty frequently is BNB burn some tokens, and this is them trying to have an attractive token model. So what they have here is they burn tokens. They take tokens out of circulation pretty frequently, and this is the 23rd burn we've seen. So they've taken another bunch of tokens out of circulation, but it hasn't really affected the price of BNB that much. So we will keep an eye on that, but let's move on to the next one. Not the first time, it is the 23rd time, so we have covered that news pretty frequently here on the channel. We have an interesting article here. The Digital Currency Monetary Authority has called their new form of digital currency Crypto 2.0, and this, unlike decentralized cryptocurrencies such as Bitcoin, is designed to work within traditional financial systems. So let's take a look at this. The DCMA says their new digital currency, Universal Monetary Unit, is similar to a central bank digital currency. However, its design means it can be used internationally and isn't tied to a single currency or country. So the DCMA is a privately run association founded by Barry Silbert, who also runs the DCG group. So DCMA works internationally to promote the use of digital forms of money, and since 2013, the DCMA has been liaising with the governments and world leaders of countries interested in developing CBDCs, including China and the United States. So we have many different central banks currently discussing central bank digital currencies and how they can launch them, and they have pretty short-term goals here. We're looking at toward this year or next, and what we are seeing here is a race to create these central bank digital currencies. We did see a video of the president of the European Central Bank just 2 weeks ago, I think it was, or 3 weeks ago, saying that they are trying to move forward with their central bank digital currency over concerns that another country will do it first and it will be heavily adopted in Europe, or even that a private entity like Google or Meta create a central bank digital currency and that gets heavily adopted. The European Central Bank don't want this. They want their own central bank digital currency to be adopted within Europe. They don't want another group, whether that's a private company or another jurisdiction, to be able to control transactions within Europe. So we're seeing a sort of race against time with this, but we're seeing different options be revealed. And this is another option here. So the DCMA revealed the official launch of UMU at the International Monetary Fund spring meeting on the 10th of April. So the currency is said to comply with the IMF's recommendations for digital assets, and UMU is legally a money commodity, can transit in any legal tender settlement currency, and functions like a CBDC to enforce banking regulations and to protect the financial integrity of the international banking system. So interestingly, central banks can customize the new digital currency to comply with the specific regulations of their current country. In addition to a payment system, the use cases of UMU include a store of value that protects against currency inflation. Still, it is not considered legal tender for domestic price or international trade negotiations. So we will keep an eye on this and how this plays out. The DMCA have named the new digital currency Crypto 2.0, and the term refers to applying cryptography and distributed ledger technology to a monetary system suitable for use by tightening regulation institutions. And this included central, commercial, and retail banks. So a really interesting concept here. Definitely something I'm going to be doing a lot more research into and see how this can work and see how this can interact with cryptocurrencies as well. That's something we are really big on here and something that is really important. Let's move on to the next article here and see what's going on. Please don't forget, if you haven't already, to like today's stream and subscribe and press the bell notification button so you don't miss the latest cryptocurrency news. As I said, we do these live streams every single weekday. So if you have enjoyed today's stream, we're not done yet, but make sure to like and subscribe. We are currently on 26 likes for today's stream. Let's try and get that up to 35. The views are much higher today, so I'm very happy with how this is going. 2,876 subscribers on the channel so far, on a mission to get to 100,000 by the end of the year. And we can see here, Sui Network developer purchases FTX's stake for $96 million. So Maison Labs has bought out FTX's stake in the company and the right to purchase over 800 million tokens. So the initial developer of the Sui Layer 1 blockchain, Maison Labs, announced on Friday it has repurchased all of FTX preferred equities in the company, including the exchange's warrant rights to purchase Sui tokens. So they've said the bankruptcy court approved the transaction for the District of Delaware, which oversees the bankruptcy case of the collapsed exchange, and cost approximately $96 million. FTX had warrant rights to acquire 890 million Sui tokens, and FTX acquired its stake in Maison 2 months before going under in November. The bankrupt exchange led a $300 million Series B funding round for the Sui network developer, participated by other notable crypto investors. So we can see here the court filing revealed FTX invested around $101 million and received up to 570,000 shares of equity in the Maison Labs and warrants to purchase up to 890 million Sui tokens, yet to be publicly launched. However, following the bankruptcy proceedings, Maison managed to reach an agreement on a potential buyback of the shares pending the court's approval. So this is a really positive thing to see here. They've said that we are very pleased to close the transaction, which speaks to the tremendous confidence we have in our capabilities, technology, and partnerships, while also enabling us to preserve flexibility in how we operate our business. So the buyback perhaps goes to the list of recoveries by FTX debtors. On April 12th, the lawyers confirmed that roughly $7.3 billion in liquid assets had been recovered on behalf of the creditors. They opened the conversation that FTX may relaunch as a cryptocurrency exchange, but this actual concept here that they've managed to hopefully buy back those shares and remove FTX from this company allows them to continue to grow, and that means a new positive thing for the cryptocurrency project. That is something we like to see. We can see next here, we have ZipMix investors wants to return only 10% of assets to creditors. So ZipMix is struggling with its $100 million rescue plan as its investors seek to change the original agreement. So let's take a look at this. The venture capital fund that agreed to buy bankrupt cryptocurrency exchange ZipMix for $100 million has altered the buyout deal and seeking to pay the company's creditors 10 to 20% of their debts. Now that is a small amount. Jerome said SUI is pronounced SUI. I was wondering that when I was saying that. Thanks for clearing that up for me. We can see, I can just check here that the video looks like it's got excellent connection again, so let me know if the video stream is back to normal. Well, apparently Jerome says SUI means water in Japanese. Very interesting, Jerome. Thanks for letting me know that. I was a bit confused when I was trying to say that. Didn't know what it was meaning. Let's take a look at the next article here. According to a Bloomberg report, ZipMix disclosed in a letter to the Singaporean court overseeing its restructuring that an unidentified investor sought to pay creditors less than agreed as the exchange had failed to meet some conditions stated in the original deal. So a person familiar with the matter revealed that the unnamed investors is V Ventures, a subsidiary of the Thoresen Thai agencies. The venture funds initially agreed to repay the creditors fully, and now it's dropped to 10 to 20%. That is such a significant drop, but we will see how this plays out. We will continue to report on this. Massive decrease there. Let's move on to the next one. We have Celsius preparing for litigation against one of its creditors. So the bankrupt crypto firm is reportedly filing litigation against one of its creditors. Let's take a look at this. In a tweet posted by Tiffany Fong, it appeared to show a Tiffany Fong litigation expense, which, according to the image shared, took 77 hours of work, costing $72,000. Alongside the image, they wrote, "Well, it seems to have your attention, Celsius Network, you got to be kidding me." The language used by the individual suggests the findings came as a shock and they weren't expecting to see their name on the list of Celsius expenses. So in a reply to the tweet, an account by the name of the Financer said, "They sued you?" To which Fong replied, "Let's take a look at this tweet itself and see what's going on over here on Twitter. Looks like they wanted to, even though they owe me insane amounts of money." So you've got to be kidding me. And they've got her on the list of expenses, and they said they sued you, and she said looks like they wanted to, even though they owe me millions of lots of money, essentially. So we can see her portfolio balance is $119,000, and now Celsius has gone for bankruptcy, and now they are looking to claim back those funds. Let's take a look at this article. Let's find where it is. We've gone off the article. Let's go back here to the point of the article, a point of the Twitter page. So a tweet by Cam Cruz shares an in-depth breakdown of the supposed matter surrounding Tiffany Fong, and they stated that they'd billed creditors $1 million for his work over January and February, and this included $5,726 to analyze fallout from the Tiffany Fong leak. And you could have asked any creditor for free. The leaked bids revealed you to be filthy liars. So ongoing debates with Celsius here and how they can deal with these problems. Celsius was one part of the fallout of UST, which depegged back in May 2022. Celsius fell as a result from this, and we are still seeing the courts try and sort this all out, but we'll see how this plays out. Moving on to the next one, China Network announces confidential submission of draft registration statement. So blockchain and smart contract platform has submitted a confidential draft registration to the US Securities and Exchange Commission for a future initial public offering of its stock. Very interesting here. And let's go down here and see what we've got to say. The SEC has received a draft registration statement on Form S1 from China Network, which has confidentially submitted it concerning the company's planned IPO of its common stock. So the project offering size and pricing range has yet to be established and is subject to market and other conditions. The IPO is anticipated to start when the SEC completes its review process. So earlier this year, SEC Chair Gary Gensler said everything other than Bitcoin should be considered a security. He has flip-flopped on this idea many times, but he has now come to the conclusion that anything other than Bitcoin is a security and therefore needs to be regulated by the SEC. So he asserted that aside from Bitcoin, every other cryptocurrency token has a project team aiming to market the token and draw investors. So to determine whether an asset is a security or a commodity, we use the Howey test, and this is him signifying that the Howey test means that every other cryptocurrency except Bitcoin is a security, and this isn't what we agree with in the cryptocurrency space. The Howey test was created in the 1940s. We need another test that we can create in the modern day when we have these modern day technologies like cryptocurrencies so that we can have clarity over these issues. So the CEO of the network responded by claiming that XCH, the token of the network and the company's native token, should not be considered a security, as it was never sold in a public sale, and the public sale requirement is required to classify securities according to the Howey test. So there is a belief that if a token has an ICO, then it is a security according to the Howey test. But again, this comes down to lack of clarification around the regulations. The Howey test is just not clear. When you try and put this old thing onto the cryptocurrency industry, it does not fit, it does not work, the clarity is not there. So the debate that we are having over and over again for the cryptocurrency industry, and something we are still fighting for, to see clarity over this regulation. Let's move on to the next article here. We have Ripple launches crypto liquidity hub for businesses, and this will give firms access to digital assets without them worrying about multi-venue sourcing and intensive integrations. So we can see here Ripple continuing to move forward. So the Liquidity Hub, available 24 hours a day, 365 days a year, will source crypto assets from the broader crypto market and enable businesses to supercharge liquidity and support their end customers looking to buy, sell, and hold digital assets and related payments and operations. So the platform will leverage a smart order routing service to source crypto assets from various liquidity venues, including exchanges, market makers, and over-the-counter desks. So the hub was created to fill the gap between the crypto and fiat world. Very interesting here. Ripple still making big moves. It'll be interesting to see who adopts this method and continues to move forward. Let's move on to the next one. We have here the US Department of Justice indicts former investment banker for crypto fraud scheme. So Russell defrauds multiple investors and used their funds for his benefit and sent them fake documents when they sought to recoup their investments. So we can see here the US Department of Justice has charged him, a former investment banker and registered broker, with the Financial Industry Regulatory Authority, with allegedly running a cryptocurrency investment fraud scheme that duped multiple investors through false promises of high returns. So another bad actor filtered out the space. This is exactly what we want to see, and we want to see more of it, and that is why we are pro-regulation. We just need to get that regulation correct. We can see here that the Arbitrary Investment I didn't say any of that right. Arbitrary Improvement Proposal, AIP 1.05, was in fact rejected. Now, this comes in a long list of problems caused for Arbitrum following the airdrop that we did see. We can see here that the voting pattern perception is that smaller voters voted primarily interested in raising the value of Arbitrum's governance token. In contrast, larger holders, which hold millions of ARB tokens due to delegations, prioritize the platform's long-term viability and the Arbitrum Foundation ability to distribute tokens. These are the most significant justifications for voting against the protocol. So the protocol was created in an attempt to fix the unauthorized and undecentralized decision of allocating 750 million Arbitrum tokens valued at approximately $1 billion to the foundation from the DAO, and the proper AIP 1.05 mentions that what happened on AIP 1 was a blatant abuse of the DAO's power for treasury resources. Now, this caused a huge amount of uproar within the cryptocurrency space when this was taking place following the Arbitrary airdrop. We are still seeing the fallout from that. Now this proposal has been rejected. They'll have to come forward with another proposal to continue working to please the community, because the Arbitrary community right now are not particularly pleased. Let's move on to the final article of today's stream, and then we are going to take a look at the price of Bitcoin and do some Bitcoin analysis. So we have seen the judge sentence a Silk Road Bitcoin fraudster to 1 year in prison, and the perpetrator of a wire fraud that netted 50,000 Bitcoin from Silk Road in 2012. Now, saying 1 year in prison, I would say that's a pretty short prison sentence there. But we can see more about that in that article. If you want more information on that, don't forget to go to cryptosavingexpert.com and sign up using that big blue button there. Put in your information, create an account, and if you tick that box there as well, you get access to our newsletter that is launched every single Tuesday at 11 a.m. BST time. So make sure to do that before tomorrow so you don't miss out on what's happened in the last week of crypto and what we expect to see in the next week of crypto. Everyone puts in their inputs on that, and then the writing team get hard at work, so you'll be able to hear a bunch of different opinions. It's not any biased in any way. You get to see what the thoughts are here at Crypto Saving Expert and what's happened in the space. So we can see here for the price of Bitcoin, let's move that away so we can see this a little more clearly. We can see here that we were trading within a range of $26,600 to $28,800 for a set period of time. We were talking about this range as we were trading within it. We then saw a nice massive move to the upside. We now have a level of support at $29,800. I'm hoping we hold on to this level. If we take a look on the hourly chart, we have bounced this numerous times now, so I'm hoping we do hold on to this level. If we don't, we could see a move to the downside. We have a level of previous resistance that we hope will last as a level of support at $28,800 and $28,600. We also, on the daily chart, if we move out here, I've spoken about this level a lot, but I'm not going to shut up about it because I think it's important we all know. If we go to the daily chart and we take a look at the lowest daily candle close during the June-July crash in 2021, if we put this line in green instead so we can see which one it is. If we go back to the current market and we go to the 4-hour chart, you can see that line is this significant level that we are currently trying to hold. So that, I would say, is a pretty important zone, 29,850 to 29,800. That's what I'm looking at to act as a level of support. Now, if it was a solid level of support back in June, July 2021, when we saw that massive crash, I'm hoping it is a significant level now that we can continue to hold. So that is what I'm keeping an eye on. But right now, we do have to remember, we have seen a massive rally to the upside since the start of this year, when that light just switched and we saw that bullish momentum within the cryptocurrency industry. We have seen a massive, massive rally. So always just be careful with your leverage as usual. We do have to be careful. We've seen a massive move to the upside now. Hopefully it continues, but you never know in cryptocurrency. We do see volatility, and the markets like to move in the path of most pain. So don't be shocked if we do see some volatility within the markets. Just keep an eye on these levels of supports and resistances. As always, we can take a look at some indicators as well. See what's going on here. Let's take a look at the RSI on the MACD on the daily chart and see how this is looking on the long term. Overall, the MACD is pretty neutral. The RSI is currently sat at 62, so not massively bullish or bearish, not massively oversold or overbought. Instead, we are seeing pretty neutral indications from both those indicators on the daily chart. So we just need to keep an eye on them, keep an eye on our supports, and hopefully the price of Bitcoin holds this significant level of support here. We can continue to move upwards, but we will be keeping an eye on that here on these live streams. As I said, we do these live streams every single weekday, so make sure to tune in every day if you haven't already at 11 a.m. BST time. Don't miss it. Put on your bell notifications so you don't miss these live streams. That is all we have for today, so thank you very much for tuning in. As always, let's see how many likes we've reached on today's stream. We are currently on, let's get this right, we are currently on 31 likes. We were so close to hitting that goal. We'll have to try again tomorrow. Thank you very